Munich Edelmetallmesse, the precious metal fair here in Munich, as I said already. Commodity TV here live for you on the spot, on the location. And with me here is UEC, Uranium Energy Corporation, with Amir Adnani, the CEO. We have interviewed many times a really fantastic uranium company, and we want to talk about the latest developments. Good morning, Amir, and always good to see you.
Yeah, great to be with you here in Munich.
Thanks. I think we spoke the last time end of May, beginning of June, but since then you had some significant news releases. With good new land consolidation, 43 101s. Maybe you elaborate a little bit what happened the last 5 months.
It's been a busy 5 months, and of course for UEC this continues to be a very important year for corporate development activity. When we see a relatively sort of soft uranium price, one that hasn't recovered yet and is still consolidating, that to us is a great window to do corporate development, make acquisitions that could be very accretive and build long-term value. So in August of this year, we announced the closing of our Reno Creek acquisition. That's a fully permitted, low-cost in-situ recovery project in the Powder River Basin of Wyoming. This is a very exciting area. Powder River Basin is home to a number of operating uranium mines, processing plants. There's infrastructure there. It's a very established region for uranium mining, both in the United States and the world in terms of having decades of history.
Yeah, and no issues with permitting, of course, because they're used to it, right?
The permits have been issued for this project, so we felt it was a real great acquisition. Just to put it in perspective for you, just in the last 5 or 6 years, the money invested in advancing the Reno Creek project was over $60 million.
60.
60. Cash.
That's a lot of money, yeah.
And our acquisition price came in at just under $20 million in stock. And that was issued to a very mining-focused private equity group who's now become a 10% shareholder of our company. So it's a win-win deal in the sense that we gain a large strategic shareholder. Them taking less than $20 million in our stock for an asset they have $60 million invested in is a huge vote of confidence that in terms of the upside they see in our shares. Yeah. It gives us another low-cost ISR project in the U.S. that complements what we have in South Texas with our hub and spoke, and of course what we also have in Paraguay. And it comes at a time when there's growing unease in America about U.S.'s dependency on foreign imports of uranium. The fact that right now 96% of uranium requirements in the U.S. have to come from either imports or other sources. So there's growing interest from the administration and policymakers to see a turnaround and improvement in U.S. uranium mining. So very timely acquisition, very attractive terms. That was in August of this year. And speaking of Paraguay, as you know, we had an announcement in September. Now, as you know, this is our titanium project.
Exactly, yeah, that would be my next question, yeah. What's going on there? Because, I mean, that's significant value, but to me it looks like it's today zero valued in your company. So what are there maybe some ideas which are coming up? What you want to spin it out to shareholders, or you can sell it maybe? I don't know.
Yeah, so to step back, let's remember that as a company, we have been operating and have become established now in Paraguay, the country of Paraguay, for over 5 years. So in those 5 years, we've established an office. We have a very competent country manager in Victor Fernandez. We have a small team of geologists. We've developed relationship with lawyers, with the government, with other sort of consultants. So it really has enabled us to be able to do business in that country. We were there, of course, for the 2 uranium projects that we have there that are also low-cost ISR amenable projects. In late 2015, when we saw the opportunity at the bottom of the titanium market, when prices had really crashed around $55 per ton, to acquire the Alta Pirana project, it made a lot of sense because the acquisition was for almost less than 1% dilution, so very insignificant. But we knew that in Paraguay, almost the entire mining law was rewritten in 2010 to accommodate the development of this project. That's how significant this deposit is. And that there was over $25 million invested in this project, led by very famous American geologist David Lowell. who's made 50 discoveries in South America. We knew this was a key asset to own, and that at the right time, we would find a way to monetize it, sell it, joint venture it, but that it would be beneficial to UEC shareholders. We've been fairly quiet on this for almost a year and a half since that time when we first made that deal. This past September, we announced the 43-101 report. And if you look at the 43-101 report, it talks about 4.7 billion tons of ilmenite, which is the feedstock for titanium oxide, makes it one of the largest, highest grade ilmenite deposits in the world. Fairly shallow, from surface down to maybe 6 or 7 meters. And so you look at all of this, and you know, to answer you one thing you said, it's definitely not worth zero.
But it looks like today is zero in your company valuation. I mean, that's crazy.
Look, it kind of makes sense because we're a uranium company. We're totally uranium focused. This news only came out a month ago, and it's only in the last sort of 6 months or so that the titanium prices have staged a very serious recovery. Remember when we did the deal, we were up $55 per ton. Right now, the price is approaching $200 per ton. JP Morgan and other banks have initiated coverage of the sector, writing very positively that they see a multi-year uptrend in the titanium prices due to low inventories and surging demand. And so all of a sudden this stage is set very nicely for this asset to be...
So you wait maybe a little bit more, yeah? Just wait a bit more. Holding costs are low, I assume?
Yeah, you know, there's definitely some very low-cost steps that we can take to further enhance the value of this project, which we will. But we're not in a rush to quickly get out of it today or tomorrow. It doesn't cost us much to hold it. We already have the team, the infrastructure in Paraguay to easily and maintain it with low cost.
Then take it easy, yeah?
So I think in the next few months, watch for more news flow and activity from us on ways we're going to advance this to create value. And look, we're in the business of creating value. For most of the last 12 years, it's been through uranium. If now for an extra little bit of effort, it's related to another metal, I think our investors, as long as they see we're creating value, they'll be very happy with that.
No question. I'm an investor too, by the way. So I want to see that value, definitely. But I think also, aside of the titanium, you had a great news about North.
The North Reno Creek.
Reno Creek, exactly. I was searching for that. And I think now you have really put a beautiful land package together, right?
I really like the way you described that. It is now become a beautiful land package. Look, again, it was, so you're right, that was actually just announced while you and I have been here at this conference. And look, that's another win-win deal. Because the company that we acquired it from, for them this would have been basically a stranded asset. North Reno Creek is basically very much parts and pieces of the main Reno Creek project that we have, except historically over the last 10 or 11 years, different companies own different pieces. And this happens in the US when a lot of these projects that have significant history have been staked or acquired by different players. A lot of value is unlocked when one player can come in and consolidate the whole land package. And in this instance, all the money and permitting that had gone into the main Reno Creek project can benefit and cover the North Reno Creek project because it's all intertwined.
Yeah, because you're now connecting all the missing dots, I would call it. Yeah.
Exactly, and this is a deal that for years should have happened, but just had not been done. So again, it goes to show you that good things can happen at the bottom of the cycle, where good deals happen that can unlock significant long-term value. And again, it's a win-win deal because for us, it completes now a much bigger project in Reno Creek. For the other company, it becomes something that, again, they weren't going to be able to develop really on their own. And now it gives UEC a very noticeably large position in the Powder River Basin of Wyoming. Again, this is a great address, great location to be. And the new Reno Creek project, once we complete the acquisition, we'll have a new 43-101 report. We'll show what the combined resources of this combined land package can look like. So it'll put us, I think, in a very lead position in this part of the U.S. and Wyoming.
Fantastic. So let's put it on another perspective. The key is you have assembled sensational land package. You have with the Hobson plant, you have your production facility. Let's have a word on the uranium market, because honestly, I don't understand uranium prices these days, because what I understood is that we are in a deficit in the market, but the price is like nailed on the $20 floor. Really, it's like bam, bam, nothing happens, yeah? And we are building and building and building nuclear power plants, and we need the power definitely, because e-mobility needs so much power in the future, and you cannot do it with coal fire, because it makes no sense to have coal-fired power with an e-car, because then you can burn diesel and petrol. That's the same, yeah. So for me, it's the question: how do you see the market today and maybe for next year? And is there a chance that, let's say, all the buyers from the big utilities really restart their long-term buying? Because I understood that now 2017, 2018, the 10-year contracts are running out, and I think the most horrible thing for a nuclear power plant is you do not have the uranium secured. What's your view on that?
Very good questions, and so let's start with one or two key points. Okay, even though the uranium price seems to be nailed at $20 per pound, as you put out, let's not forget that there remains a structural deficit of uranium when you look at primary supply, which is mining of uranium, at around 160 million pounds, and demand at over 180 million pounds. So if we just look at supply, demand, supply from mining, structural sort of supply, demand, there's a deficit. So again, we continue to have this market that is oversupplied as a result of above ground inventories, secondary supplies. And this continues to be driven by the overall fuel cycle being somewhat challenged and slow to recover due to Japanese recovery being a bit slower. We're at 5 reactors now. I think many people expected that by now we'd be at 15. We're at 5. But just recently there was the election in Japan. Prime Minister Abe had a landslide victory that only gives him more power to carry out what he has identified as the path forward, which is 20% of Japan's electricity to be nuclear power. So I think that you're going to see Japan hopefully gain a bit of momentum going into March of next year, which is the Japanese sort of fiscal year end. And if we continue to see reactors in Japan come back online, we're at 5 now, we could be at 9 or 10 by March. That's going to just continue to incrementally take those secondary supplies or inventories off the market, improve the overall picture. And very quickly, we go back to that structural deficit, and things are going to look good. Now, let's not forget, Kazatomprom announced cuts earlier this year. They may be announcing more. Cameco has had difficulties and rightfully sees their difficulties being announcements they've had recently with laying more people off. So clearly, they're going to hopefully also have some additional supply cuts. Areva has announced they're going to put some of their developments in Niger and Africa on hold. So these are classic signs of what really causes the market to become more constrained, tighten up. The supply could certainly tighten up with both the producers cutting back more, the Japanese coming back online with more. And then all of a sudden, to your last point about the utilities, who are very much expected to come to market for another round of contract signing, another round of basically doing long-term contracts, which they did 7 years ago, and those contracts are rolling off now. I think we could be hopefully in a position to see that perfect storm develop over the next year and see the price finally make this move above $20 per pound.
Yeah, exactly. That's what we're really praying for, because it would be also important for your production to restart.
I think it would be very great. Look, we are taking maximum advantage of this period of quiet action around $20 per pound to really build a strong company. I mean, I think we want to be in a position where, again, when we see that recovery take place, we look back and say, you know, we were able to truly used those moments where the sector was out of favor to do meaningful and important corporate development to keep expanding our low-cost in-situ ISR recovery portfolio. You will never be able to do deals like the ones we're doing right now in the last couple of years when the market turns, and you've seen that and know that. And so I think in a way, this is a huge opportunity that this downturn is continuing for very aggressive companies like UEC to get stronger.
Yeah, and you have the money and the ability.
And we have the money and ability. I mean, earlier this year in January, when we did our public offering, if you remember, one of the things we said was we want to have a strong treasury to not only work through this downturn, but to have a war chest for acquisition.
And you use it very wisely, I would say.
And since we said those words, we have been living up to it. We've done, 2 acquisitions. We're not done yet. And so in a way, while it frustrates me as well to see the price be, as you say, nailed at $20, I'm not losing any sleep over the fact that it's given us an amazing window to do some exciting and very accretive acquisitions and deals. So I think this is the best of both worlds in a way, and UEC shareholders really benefit from how proactive we're being during the downturn to build that long-term value.
Exactly. Amir, thank you very much for that. As usual, quite long, but perfect. Thank you, my pleasure. And yeah, keep it going, and I would see latest PDAC, we do another update. Great, thank you. Ladies and gentlemen, it was Amir Adnani, the CEO of UEC. And I mean, I mustn't summarize that because it's quite perfect what the company is doing. Uranium, titanium, enlarging the land positions and really taking advantage of uranium still depressed at $20 per pound. That's exactly the right strategy to be prepared for the next upturn. Thanks for watching us. Bye-bye from Munich.